Bitcoin is at a major technical crossroad that may trigger a sharp trend in the next week. You'll learn today about a trigger you should take advantage of and what it may mean for the weeks ahead. You're going to learn to trade, not forecast. Hi, I'm Robert Miner with Dynamic Traders Group, and this is our weekly trading video where I teach you a specific trade strategy and a current market position. It's a brief version of the much more extensive videos we provide our DT Report subscribers every week. There was no video last Saturday because I was giving a workshop at the Traders Expo in Las Vegas, but I'm back to our regular schedule of Saturday videos for YouTube and Twitter. So even if you don't trade Bitcoin, what you learned today you can also apply to any market and any time frame. So pay attention and be sure to stick around to the end of the video where I'll tell you how to receive our just published 12-page dollar, euro, and Bitcoin big picture report, as well as the recently published 17-page big picture report for the stock indexes. So this is the Bitcoin weekly data, and it's just going back to April 2021, April of last year. And these down below this indicators the weekly momentum cycles. And what's significant is last week, the weekly momentum made a bear reversal. And that's a wake-up call that more than likely Bitcoin is going to be sideways to down for another 2 to 3 weeks. And that's just contrary to what so many people believe for Bitcoin in the current time frame, particularly with the current conflict going on overseas. A lot of people promoting that Bitcoin is some sort of flight to safety or safe haven or where dollars flow to. Well, that's been put to rest. That's not the case. If that were the case, when nuclear reactors were getting shelled, Bitcoin would be on the rise, not sideways to down. So just keep that in mind. Is you got to really beware of all these myths that are spread around of where money flows and what's safe havens and all that stuff. Look at the charts. The charts tell you the truth, the reality. And the charts are telling us, the technical position, that more than likely Bitcoin is going to be sideways to down for 2 or 3 weeks, regardless of the international conflicts that are going on. Let's take a look at the daily data. And by the way, stick around. I'm going to take a look at the S&P also before we're finished today. So this is the daily closing data for Bitcoin up through this Friday. And back around January, this is where we had the weekly momentum bull reversal. And there wasn't a great deal of follow through on the upside following that bull reversal. There was a bit of it. This is on the closing data. Looks like a 5-wave advance. Then we had a correction. But here's the tale that's going to be told in the next week. Is first of all, keep in mind, bullish reversal on the weekly momentums. Not much of an advance, not much follow through. And then we've already had a bear reversal 2 weeks ago in the weekly momentum. We look at this, and here's the signal that you should be aware of. And that is if Bitcoin makes 2 consecutive lower closes below this February 25th close, is more than likely the trend is going to continue lower to a new low. Now, why do we say that? This is a swing high, and I call it the closing overlap, is that typically if a trend is impulsively bullish, it doesn't make a close below a closing high. And if it does, that indicates that this is a corrective advance, not an impulsive advance. So those are Elliott Wave terms. The whole point is 2 consecutive lower closes below this high. And Friday made 1 close below it just by a few dollars, not significantly. But if we have another lower close next week and potentially early next week, more than likely this is a correction and Bitcoin is going to continue to a new low below the January low. And let's take a look down here at the daily momentums. The daily momentums are what we call dual look back bearish, just coming off the overbought zone. And these are momentum bear reversals, indicates that a momentum high is complete and the momentum trend for 2 or 3 days, if not longer, should be sideways to down. It's pretty reliable indicator when we get what's called a dual look back bear reversal from the overbought zone. So that's also indicating that more than likely 2 or 3 days sideways to down. And certainly if Bitcoin then were to close below this little swing low on February 27th, then we have a very strong signal that Bitcoin will continue to below the January low and potentially considerably below that. So that's what we're looking at in the next week. It's certainly a really strong warning if we get another lower close earlier this coming week, that the trend is reversing to bearish. So keep that in mind, because I know there's a lot of fanatics for Bitcoin, and you'll hold on to a position just because of some ideology or something long after the technical position is indicating that the trend's going to be down. So I'd be really cautious if we get a lower close early next week. And if we get a close below the February 27th close, then that's the confirmation that the trend is going to continue bearish. So this is really important for Bitcoin trades because they have such large percentage moves in just a few days, and particularly over the 2 or 3 week time period, they can have very substantial percentage moves, and you don't want to be on the wrong side of that market when technically it's strongly indicated the trend's going to be down. Before we take a quick look at the S&P, if you'd like to get some more updates than just these YouTube videos, you should join our DT Traders News at dynamictraders.com. Choose the Traders News tab, or up in the upper right corner of our channel here, our YouTube channel, a link to our DT Traders News where you can register for that, and we'll just send you, we won't spam you or anything, we'll just let you know when we have some new updates there. There's more updates absolutely free. Check it out. Also, in the comments below, feel free to make any comments you'd like about what you learn here, as well as what you might like to learn in the future that I can address. Okay, let's get back and take a look at the S&P, and then I'll tell you also how to get a 17-page report about the long-term position of the stock indexes. This is the SPX Weekly. What I want to bring to your attention is the weekly momentums are actually what we call triple look back oversold. That's a real firm position that more than likely the S&P has made a weekly low here 2 weeks ago on this terrific reversal day. We're closed near the high of the week. And that's hard to grasp given the events that are going on in the world today and the conflicts that are going on, that more than likely the S&P is at a weekly low going to be sideways up for 2 or 3 weeks. So keep that in mind. This past week was what we had considered to be the maximum time target to complete a weekly low. So again, we've got our weekly momentums, triple look back oversold. We've got a time target this past week, which was the maximum to complete a weekly low. This is the daily data. There's 2 different wave counts I have on here. I'm not going to go through them in detail, but I'll just let you know that either one of these wave counts, if you're into Elliott Wave, which I hopefully you are because it's really helpful, but they both indicate the same thing over the next 2 or 3 weeks. They both indicate that more than likely the SPX will be sideways to up for a couple of weeks. Right now, the daily momentum still look back bearish from the overbought zone, probably sideways to down 2 or 3 days, but that should be a corrective decline, not the resumption of a bear trend. So notice how you should be, probably should be, all that sort of thing. So what we're looking at in the next few days, if the next daily momentum bull reversal is made and the SPX has not traded below this low from the 24th, that would be probably a setup to complete a minor corrective decline followed by a continued advance for another week or 2. Now, it's not changing the longer term trend, which is quite bearish for the S&P, but I'm looking at just over the next 2 to 3 weeks. More than likely, it's going to be bullish. A trade below the February 24th low, of course, voids either of these wave counts we got and any bullish sort of outlook. But why do I have this 5 trading day count? Because ever since the January high, I've got some of them marked off, about every 3 to 5 days, 5 at the maximum, I guess there's 1 or 2 that were 6, but the S&P makes that what we call a daily reversal cycle. So let's just go back to the February high, 5 days made another high, 5 days a high, 5 days a low, 5 days a high into Thursday's high. So the maximum time to complete a corrective decline would be 5 days or March 10th, which is next Thursday. That's the maximum time. That's not the time target. It could be any time between 3 and 5 days to complete a corrective decline. So contrary to what a lot of people are looking at the market to be really bearish, regardless of the turmoil going on in the world and in Europe, is that the technicals are indicating that the odds are that the S&P is going to complete a corrective decline here in the next 2 or 3 days and then be sideways up for 2 or 3 weeks. That said, a trade below the February 24th low voids that completely. So we look for, not for forecasting, we look for trade setups. That's what we're going to be looking at in the next 2 or 3 days. And of course, if you're a subscriber to our report, the day that setup is triggered, I'll let you know. So that's it for today. Have a fantastic week. Keep safe, keep healthy, and be prepared, and learn how to trade, not forecast. Robert Miner, over and out.